Yo, what's up guys? Okay, so in this tutorial I'm going to share with you what you actually call fake BMSs and the true BMSs, right? And I'll go on to explain like the stop hands, what we call stop and liquidity grabs, right? So if you look at this chart at this very point, right, we can all see that the market created a new high here, right? It broke this previous high. This is a BMS, right? Market broke out this structure, right? How do we tell, right? At least when price breaks a previous low, right, we tell by seeing at least two candle closes above that zone, right? At least two candlestick closes above that region. In this case, where this candlestick close, then with that bearish open and close above this zone. So this is a clean or a true BMS that we have there, right? So seeing a BMS like that, price suggests that we should have a corrective move back to these lows. Then we get buys from that zone, right? Let's actually look at that very point, right? Okay, so we'll actually think that price should come to this zone, then we bounce up going up to the highs, but unfortunately price moved a little bit lower than that zone before the buys or before the bulls kicked into the into the market. So what is it that was actually happening right there, right? So do we happen to have another BMS to the downside, right? Let's look at it, right? So if you stretch this to the right, okay, these are very low, right? So is this a BMS that actually happened in the market? That's the question that we have today, right? Also, is this a BMS again, right? Share your thoughts in the comment section, right? Is this a BMS right there, right? But anyways, you share your thoughts. Let me just share with you my knowledge, right? Okay, so the moment you see price going below a previous low, price already it has tapped new lows with respect to this very point, right? But is it really a BMS? So in our case, the way we study here, the way we trade here, this is not a BMS in the forex market. Why? Remember I said a BMS you should have at least two candlestick closes above a previous high or a previous low. In this case, we got a single candlestick that went in, then the next candlestick came to close above. So you have only one candlestick that closed below, the next one is closing above that region. So it's not really a BMS or a break in market structure. Then let's look at this one again, right? Is this a BMS that we have? No, it's not a BMS. Why? We have only wicks lying below those lows. Then if it is not a BMS, what is it now, right? So this takes us to what we call stop hands or liquidity grabs, right? What it simply means is we've taken out this high, right? There was too much liquidity that was actually lying below these lows, right? The market makers manipulated. This was a manipulation move, or these are actually called institutional candles. How do you know that they're institutional candles? You can actually tell that these are institutional candles, right, by the length of those candlesticks, how wide they are, right? So as price approach this zone, can you see the volume that was there? There was just too much volume. The length or the size of these candlesticks, they are relatively big compared to the candlesticks that are actually in that region, right? So all that they want or their objectives were to grab liquidity that was lying below this low, right, and grabbing the liquidity that was lying below this very low, right? So these were institutional candle. A single candlestick closes below and the other one closes above, right? So in our case here, Sniper X FOREX Empire, right, we have two types of stop hands, two types of liquidity grabs, right? Either the market is going to grab liquidity by wicks, right, by wicks, which happens to be this case, right? They're grabbing this liquidity by these wicks, right? Or they can grab liquidity by two candles, right? What we call one in, one out, whereby a candlestick, one candlestick goes into a liquidity zone or a liquidity pool, then the second candle moves off that liquidity pool very, very fast. So it's one candlestick in, one candlestick out of that zone, right? Okay, so this is a liquidity hand or a stop hand, right? A market maker move. So for aggressive traders, the moment you see or the moment you actually tell that this is a liquidity grab, you can actually try to join into the market on the second candlestick close above that first bullish candles. In this case, this one, the close of this one, you can actually jump in the market, right? So in this case, price moved low and you could actually take buys on this very high when price retested that order block, mitigating that order block, you can actually take your buys from this zone, right? So let's look at another example, but I think here I have actually explained the liquidity grab or a what, or a stop band, right? Let's go to another example, right? So if you look at this very point, price was actually creating lows here. This is an impulse corrective, right? Was this actually a break that happened on that very spot, right? To us, we say no, it's not actually a BMS. We don't expect to be taking bulls or taking buys on this very order block, right? We expect the market to continuously push downwards. Why? Because price only took out that high with a 1 in 1 out candlestick, 1 in 1 out formation, right? So this is a stop band. It's a liquidity grab to these highs, right? Then after seeing the liquidity grab, if you miss to take the trade on the second candlestick, which happened to be this one, right, which happened to be this one, the second bearish candle, if you miss to take the trade there, right, it means you are going to wait for the retest to that very order block that caused the stop and or to that institutional candle. You wait to take the trades in that very zone. It will be a strong supply zone, right? So in this case, we actually had a good setup, right? After breaking this low and price comes there, it's a KML Quasimodo setup. We explained that in another tutorial, right? Okay, so this is what we have on go, right? Let's actually take other examples on V75, right? Let's go to volatility indices. Some actually trade volatility indices, and for their case, let's study what you have there, right? So this first example here, not a break in market structure. You can tell that is a break in market structure the moment you have a wick. It's not a break in market structure that we got there, right? It's just a stop band. We're grabbing liquidity that was lying here, right? Because we had a BMS to the downside here, right? This is a corrective move. So we'll actually take sales 1, 2 on this one. We can actually take sales. If you had missed there, maybe we'll try on the retest somewhere there, right? Then price managed to move higher. Let's look at another position. Price managed to move up from this point, right? So what we got here, this is a BMS now. Price is pushing all the way up, and we got one close, second close. This is a BMS. This is a break in market structure. So what do we expect? We expect price to continuously push to the upside. So this is a corrective move. The structure has changed. We violated the trend. We're now moving in an uptrend, right? So this is a break in structure. It's a clean or a true break in market structure. It's not a stop band, right? Let's move with this instrument and investigate what was actually happening on it, right? Let's look at this high and this very point. Is this a break in market structure, right? So this is not a break in market structure. Why? Because we are seeing that we have that scenario, 1 in, 1 out of that zone. You can see the length of that candlestick, how big that candlestick. It's an institutional move, institutional candle. So it's just grabbing the liquidity that is lying above this high, then it came back into the zone. It's just a stop and it's not a break in market structure. So it means if you are to plot the impulse move from there, you take it all the way from this low all the way to this very what? High, right? Someone might actually ask again, wasn't this a break in market structure? Price actually created a new high there, right? It took out that high there, right? And we expect to take buys here. It's not a breaking market structure. It's just liquidity grabbing the previous what? High, right? So our impulse move moved all the way to that what? High. After that impulsive move, right, we got another what? Corrective move, right? After that corrective move, we got a new impulse move right there. This is a single impulse move all the way to that high, right? Then, as usual, someone will also ask a question, why not this very high? Because we got a BMS here. Let me mark that BMS that high. So this is the BMS that we got there to the upside, right? That's a BMS, right? Why not this very high? Why not this very high? Wasn't this a corrective move? It's not a corrective move there, right? Price didn't create a new high there. What actually happening? This is a manipulative move, or it's an institutional candle that we got there. The market makers were manipulating that high, right? It's just a stop band. You can tell by the size of the candlestick, right? One big candlestick off a zone taking liquidity there, the next candlestick is coming back into the zone. So when you see such scenarios, you can actually trade it right away, right? After this candle, that candle, the close of the second candle, you can join in on your sales and you target the previous lows, right? So this is what we have on this very instrument. This is not a breaking market structure. It's just a stop band, right? A fake BMS liquidity grab, taking the liquidity, taking the buy stops liquidity that are lying above this one, above this zone, right? So I believe this video is very, very helpful to all of you. I hope you make use of it in your trading, and it will be very, very helpful, right? So don't forget to like, share and subscribe on this channel if you're new, right? And for those who have been on this channel, thank you guys for your support, right? So on V75, we're actually expecting some bulls to kick into the market since sorry for this, right? For those who actually watched this video today, right, prices already come to this very low, right? So we'll be expecting to take some buy since this was a BMS to the upside. This is a corrective move, right? It took liquidity there, close some imbalances there and there, right? So it simply means that we're expecting to take some bulls. So we'll wait patiently. We see at least a bullish close that will confirm. Then we'll start looking for our trend reversals on shorter time frames. Then we start taking our buys on these instruments. Thank you.